So in today's video, I want to go over the latest report for TEQNION, the Swedish serial acquirer. They just reported their Q1 2025 earnings. I am a shareholder of TEQNION, although I just hold a startup position, and hopefully I'll be able to buy a bigger position soon. But 2024 was definitely a tough year for TEQNION. Like for all of my Swedish companies, I only own two, but I own a much bigger share in Evolution, which you've probably seen me talk about on the channel. And that was a tough year for them as well. So let's get into it. A short form report from Johan Stine, the CEO. They are battling hard to improve TEQNION in weaker markets, and the EPS was much higher for Q1 of 2025 compared to Q1 of 2024. 73% up since last year, but it's largely due to currency effects, which we'll see later on. And the EBITDA margin decreased to 8.1% from 9.5, which is concerning. While net sales is up only 6%, but down 2.7% organically. I agree with Johan here. They're making solid progress towards strengthening the group, but there is still a very long road ahead. And although things are looking much better than last year, they're still having some operational problems. I don't think the stock price has quite reflected that yet. I think they're still quite highly valued compared to their free cash flow generation. And events during the quarter, they bought six companies or five companies during the quarter and one company after the quarter. So quite a lot of activity for TEQNION, which is unusual. Only time will tell us if those acquisitions were good or not. And as we've seen with the company, bad acquisitions, they take a long time to be realized, because most of the bad acquisitions they made were acquisitions made a couple of years ago, which are only now starting to cause some troubles. But there are some other things that are concerning. Like I mentioned earlier, the EBITDA margin is going down. Net sales are a little bit up, but down organically. And return on equity is down to 13% for the rolling 12 months compared to 21%, which is a fundamental change, which is something we have to watch very closely. So Johan Stine always has his comments every quarter, which is very informative to read through. He says that they're still far from where they should be, even though they're starting to move in the right direction. I think we can agree on that. Several of our major industrial customers in Sweden continue to report weak demand and are assigning us less work. Their largest housing factory is now showing black figures, again for the first time in far too long, where they've installed their executive coach, Haukon, as factory manager, but I believed he was the guy that they acquired the company from. And this is always a bad sign where companies that they own that are meaningful to the bottom line are really hard to manage unless they have some kind of superstar that knows the business. Because really, you want to have businesses that can be run by average CEOs and still be very profitable. So that is also something to look out for. And some updates on the composition of TEQNION. Our group now includes 10 companies based in the UK, and they expect more to come. TEQNION UK is now generating more profit than the entire TEQNION group did 6 years ago when listed, which is very interesting. A little bit about the companies that they just added. A company called Awarded 2 UK is a provider of bespoke awards for corporate galas and ceremonies. Meridel UK, a leading manufacturer of commercial fueling equipment with full fuel management system and fleet software. Then they have a company called Thermo Solutions out of the UK, a specialist in high quality refrigeration, energy saving products for supermarkets, hotels, and restaurants. And then two Swedish companies which are in the funeral business. And he mentions here, as we said before, there are some companies in our portfolio that with hindsight they wouldn't acquire today. And I believe he's mostly talking about the house builders, which are causing them a lot of trouble. And here we can see the financial development for the group. Profit before taxes and the rolling 12 months 2025, 140 million Swedish, which is approximately 14 million US dollars. is much stronger compared to the total in 2024, but still below 2023 and 2022, and above 2021, which is definitely a concern. And if we compare the profit before tax for Q1 of 2025 compared to last year, it's well above that and above Q1 of 2023, 2022, and well above 2021. So that's good to see. But like Johan said, it's mostly a currency effect. And we can see just how weak 2024 was, where they actually had Q2 higher than in 2023, a little bit lower Q3 2024 versus Q3 2023, and the lowest it has been in years for the Q4 2024 of only 18 million compared to, for example, 41 in Q4 of 2021. So definitely a very tough year for TEQNION. Hopefully their troubles are behind them, but we're still seeing very lackluster numbers. And another thing to look at for an industrial serial acquirer like TEQNION is the order backlog. And the explanation here is the order backlog can give a rough indication of future sales, but is far from a perfect crystal ball. The operations of our subsidiaries varies greatly. Some companies have visibility over a year, and some have only spot sales. So we can see in Q1 of 2025, 430 million compared to a lot more in 24, 23, and 2022. So that might be another thing we have to be on the lookout for going forward as shareholders of TEQNION. And liquidity and debt is, of course, one of the most important things you have to watch out for the companies in your portfolio. And the net debt to EBITDA is something that TEQNION measures, which is going up for 2025 at 1.8 compared to 0.9 this time last year, and 1.3 for the year end of 2024. They are still below their financial target of net debt to EBITDA of less than 2.5, but the debt is going up, which definitely makes TEQNION a riskier investment. But they mention here that during Q4 of 2024, they refinanced their bank agreement with better terms and have a credit line that will sustain their acquisition pipeline for the coming 3 years. And this is one of the reasons why I love the management team. They are very honest, very aligned with shareholders. You can see the FX boost here, 21 million. One-off cost 8 million. Revaluation of earnouts 5 million. And the underlying EBT, earnings before tax, is 29. So they're basically telling shareholders not to look at 47, not to extrapolate this 47 number, which looks very impressive, but the underlying earnings of the company is actually 29 million. So that's very good to know as a shareholder. And here we have the financial targets. We touched on the net debt to EBITDA, which is the highest it has been for at least the past couple of years. So that is something we need to be aware of as shareholders. Profitability, like we mentioned, is down to 9.2% EBITDA margin for the rolling 12 months of 2025 compared to the full year of 2024 of 9.6, and they were in 2023, 2022, and 2021 well into the double digits. So this is also a concern. Finally, they like to track shareholder value, and when target 1 and 2 are in place, we put our whole soul into creating long-term shareholder value through increasing the earnings per share. This is primarily achieved through acquiring new niche companies at good valuations. So they have a very healthy financial target to double EPS every 5 years, which means a 15% CAGR. And they've done so quite easily for the last couple of years, but it's getting tougher now. And you can see the EPS 6.48 the Swedish krona for the rolling 12 months, and that's compared to 5.5 for 2024, which was very weak. Good comps, but the 2023 comps and 2022 are much stronger. So that is also a concern. The red line here shows the level of EPS needed per year to double the EPS compared to 5 years ago. So in 2028, it's going to be very challenging for them to have the EPS at 15, doubling from 7.5 kronas in 2023. So this is getting tougher as they grow and are seeing some growing pains. So this is very interesting, where we can see the comparison of the share price versus the earnings per share. And the management team talks about here that their conviction is that share price in the longer perspective will follow our earnings per share. That is the reason our focus is on increasing earnings per share. The graph above shows the historical connection, and they have a note here which I find funny and I agree with. Actually, we believe that share price more closely follows, and they have the letters here, which is total cash flow per diluted share, excluding mergers and acquisitions, borrowing, principal repayment, stock issue, share repurchase, and dividends. But for simplicity, let's track EPS instead. I couldn't agree with that more. And we can see that EPS has started to rise again while the share price has started to go down. But like I mentioned earlier, I don't think that TEQNION is undervalued compared to their free cash flow generation and their very weak free cash flow growth in the past 3 years or so. If I thought they were undervalued, I would probably have taken a full position by now. So here we can see their last 10 acquisitions, and obviously a lot of acquisitions coming in 2025. And we can see the net sales here. So these are pretty small companies, like small companies on a relative scale. Net sales of 65 million Swedish is 6.5 million US approximately. And the management team tells us that they check on about 100 to 150 companies per year, but only a few pass all of their screening criteria. But there are not just negatives in the Q1 report for TEQNION. We can see here the cash flow from operating activities the last 12 months compared to the calendar year of 2024, 132 million Swedish against 96 million. And if we go to QuickFS, we can actually see that that is actually the highest cash from operations the company has had, 136, compared to the earlier high of 125 in 2023 and 120 in 2021, which is a positive. Finally, I would like to encourage you to watch the TEQNION 2025 Q1 Q&A on YouTube. I always watch this and I actually look forward to seeing this because I really like this style of Q&A compared to the very boring corporate Q&A that they have in the States. This is much more fun to watch. And if you really want to get to know the management team, this is a very good way to do it. I also had Grok make me a detailed summary of the Q&A from YouTube, and I just extracted the transcript and put that in here so I can read over this because a lot of the times I'm listening to the Q&A and doing the dishes or taking a walk or something, so you miss out on some details. So this is good to go over again, and I will of course be adding to this once they release new Q&A for Q2. So the next time I'm making a decision of adding to my position in TEQNION, I will have all of this information readily available and just read over it to get a quick refresher of my knowledge about TEQNION. But that's it for the video today. I do want to thank you for watching, and remember to like the video and subscribe to the channel if you haven't already.